Welcome to Path Investor, where we build wealth the disciplined way. This channel is about strategy, structure, and long-term thinking. If you believe slow money beats fast money, you're in the right place. This is your path. Let's build it correctly. If you want to build real wealth, you must accept something uncomfortable. The most effective strategy is often the least exciting. It does not rely on prediction, hype, or constant action. It relies on patience and structure.
Excitement creates engagement, but rarely long-term performance. High activity feels productive, yet often erodes returns. Quiet consistency, on the other hand, compounds quietly over time.
An index fund simply owns many companies at once. Instead of trying to pick winners, you own the entire market. This removes guesswork and reduces the risk of choosing the wrong individual stock.
When you own an index fund, you participate in the growth of the economy itself. As businesses expand, innovate, and generate profits, your portfolio grows alongside them. You are not betting on one company, you are betting on progress.
One of the greatest advantages of index funds is low cost. Fees compound negatively over decades. Reducing expenses by even 1% can result in dramatically higher lifetime wealth.
Many professional managers attempt to beat the market.
Come on, just a little more!
Yet over long periods, most fail to outperform simple index strategies.
Simplicity defeats complexity again.
Automation protects you from yourself.
When investments occur automatically, you avoid hesitation and emotional timing mistakes. Consistency becomes effortless. Investing the same amount regularly smooths volatility. You buy more when prices are low and less when prices are high. Over time, this disciplined approach reduces timing anxiety.
Time transforms modest investments into substantial wealth. Compounding works quietly but relentlessly. The earlier you start, the less dramatic your contributions must be.
The quiet investor does not constantly react. They trust structure. Their portfolio grows while they focus on life, career, and family.
The foundation of boring wealth begins with broad market exposure. A total market index fund gives you ownership across hundreds or even thousands of companies instantly. You participate in overall economic growth.
Economic growth does not happen in one country alone. International index exposure spreads opportunity across global markets. This reduces dependence on any single economy. Global diversification strengthens long-term stability. Complexity creates confusion. A simple allocation between stocks and bonds often outperforms complicated strategies over time. Simplicity improves consistency, and consistency drives compounding. Automation transforms intention into action. By scheduling monthly contributions, you remove emotional hesitation. Investing becomes a habit rather than a decision. Discipline becomes effortless. When income rises, contributions should rise as well. Lifestyle inflation quietly delays wealth building. Redirecting raises toward investments accelerates long-term freedom. Growth compounds faster when fueled consistently. Dividends may seem small initially, but when reinvested, they purchase additional shares. Those shares generate additional dividends. This cycle quietly accelerates compounding. Constant adjustments often reflect emotional discomfort. A strong allocation rarely requires dramatic changes. Patience prevents unnecessary disruption. Stability compounds better than constant tinkering. Annual reviews maintain alignment without emotional interference. This allows strategic adjustments while avoiding overreaction. Measured review builds confidence. Time remains the primary growth engine.
Predictions create urgency, but forecasts are rarely accurate over decades. Participation in the market matters more than prediction of it. Stay invested rather than distracted.
Downturns are uncomfortable but temporary. Selling interrupts compounding. Staying invested preserves recovery potential. Endurance is rewarded.
Exciting strategies fluctuate wildly. Boring strategies remain steady. Stability reduces catastrophic errors. Longevity wins. When strategy is simple, stress decreases. This coffee is perfect, and look, the portfolio is growing quietly.
That's wonderful, dear. It means our plan is working.
Wow, Dad, it's up 3%.
Short bursts rarely sustain wealth. Steady contributions over decades outperform dramatic moves. Consistency compounds quietly. Automation continues through volatility. This forces buying during downturns. Discipline becomes mechanical rather than emotional. Indexing removes the need to be right about one company. It embraces collective growth. Humility improves outcomes. Small cost differences become large outcome differences. Compounding magnifies everything. Efficiency matters.
Wealth building is less about brilliance and more about avoiding large errors. Preventing catastrophic losses preserves compounding.
Complicated systems break under pressure. Simple systems endure. Sustainability builds wealth. Look at this simple checklist with its few clear rules. It endures, while this complex board overwhelms and breaks.
True wealth strategy reduces anxiety. If investing constantly stresses you, the strategy may be flawed. Calm is strength.
Waiting for perfect entry often means missing opportunity. Time amplifies returns. Participation matters more than precision. Time in the market beats timing the market.
Real wealth is rarely loud. It grows in the background while others chase excitement and headlines. The most financially secure individuals often live modestly while their portfolios compound quietly behind the scenes. Silence is not weakness, it is strategic focus. Financial media thrives on urgency and fear.
Every day there is a new crisis, a new hot stock, or a new prediction.
The quiet investor understands that reacting to noise erodes long-term performance. Discipline means filtering out distractions.
You do not need bursts of brilliance to build wealth. What you need is steady, repeatable action. Monthly investing, automatic contributions, and patience outperform sporadic aggressive moves. Consistency compounds in ways intensity never can. Dollar cost averaging removes emotion from investing. You buy regardless of market mood, which lowers the average cost over time. This strategy reduces the stress of trying to time the perfect entry. Boring systems eliminate costly mistakes.
Time in the market consistently beats timing the market. Missing only a handful of the best performing days can significantly reduce long-term returns. The quiet investor stays invested through volatility. Patience is a competitive advantage. Automation removes friction from good habits. When contributions are automatic, discipline is no longer dependent on motivation. Systems outperform willpower over decades. Quiet wealth is built on automation.
As income increases, expenses often rise just as quickly. This silent wealth killer delays financial freedom. The quiet investor increases investments faster than lifestyle. Growth goes into assets, not ego. Income is temporary. Net worth is structural. Tracking assets minus liabilities keeps attention on real progress. Quiet builders measure what truly matters.
Market corrections are not disasters. They are
Time to buy the dip.
Sell, sell, the market's crashing.
Fear becomes fuel for future gains.
Their loss is my gain. High fees quietly erode compounding. Expense ratios, trading commissions, and advisory costs add up over decades. Low-cost index funds preserve more of your returns. Small percentages matter greatly over time. Dividends are powerful when reinvested. Instead of spending them, reinvesting accelerates compounding. Each payout buys more ownership, which generates more future income. Quiet reinvestment multiplies growth. Complex strategies often mask confusion. A diversified index fund portfolio can outperform complicated trading systems. Simplicity reduces mistakes and emotional decisions. The boring path is easier to maintain for decades. Your biggest risk is not the market, it is your behavior. Fear, greed, impatience, and overconfidence destroy returns. Systems protect you from emotional reactions. Discipline protects wealth. Quiet wealth requires long-term vision. 5-year horizons are too short for serious compounding. Think in decades, not quarters. Patience aligns you with how markets truly reward investors. Whoa, look at these gains. I gotta catch up.
Comparison breeds impatience. Someone will always appear to be earning faster or trading smarter.
You know what? I'm done with that.
Wealth is personal, not competitive.
There will be years of slow growth and periods of doubt. The boring strategy works because it survives volatility. Trusting the process requires emotional maturity. Consistency eventually wins. Compounding feels invisible at first. Early years show modest progress. Then, seemingly suddenly, growth accelerates dramatically. Quiet patience turns small beginnings into large outcomes.
Financial independence does not need to be flashy. It is the ability to choose how you spend your time. It is security, flexibility, and peace. Quiet wealth creates loud freedom. In the end, wealth is not built through excitement. It is built through discipline, automation, low costs, and time. The strategy is simple, but simplicity requires restraint. Quiet builders finish ahead because they never left the path.
Wealth does not need to be loud. It does not require constant action or action or do the heavy moves. If this channel helps you think long-term, subscribe and continue building your path investor mindset. I'll see you in the next episode.